You have a non-economic, non-capitalist entity uh, basically at the cutting edge.
Institutional interest in Bitcoin and crypto are really picking up in several sectors, say micro investor Dan Tapiero. But first, on the market, Bitcoin price set up for an explosive move as this full coin turned bullish. Unlike 4th of July, the long weekend has not produced any firework in Bitcoin price, which continued to trade inside a ever narrowing range. Bitcoin is on track to form a third consecutive doji candlestick pattern on the weekly chart. This suggests that the Bitcoin bulls and bears are not clear about the next directional move. It is not only Bitcoin that is stuck inside a range. On April 7th, Jordan Temer, director of global micro asset manager Fidelity Investment, tweeted that the S&P 500 index has stuck inside a range for the past 9 months, and a breakout was due sooner or later. Bitcoin failure to break above $30,000 level has attracted profit booking in several altcoins, but a few had witnessed shallow pullbacks. This indicates traders are holding on their position, expecting a move higher. These are the select altcoins that may turn up and start an uptrend, but only if Bitcoin break out to the upside. At number 1, we have Bitcoin. At number 2, we have Cardano. The bulls are not allowed Cardano to dip below the 20-day EMA, indicating demands at lower levels. Coming at number 3 is Stellar. Stellar turned down from the overpriced resistance of 12 cents, and the price is nearing the 20-day EMA. The bulls are likely to buy the dip to the 20-day EMA. Number 4 is AAVE. AAVE has turned down from the over resistance of $82, indicating the bears are fiercely protecting this level. They have pulled the price below the immediate support at the 20-day EMA, which is $75. Last but not least is Conflux. CFX has been in a corrective phase for the past few days, but the minor positive is that the bulls are trying to defend the 20-day EMA, which is 36 cents. Now back to the interview. In a new Real Vision interview, Tapiero said that institutional endorsement, teachers fund, and pension fund have their eye on crypto space as of late and are noticing fundamental strength building within the asset class. Tapiero, the co-founder of digital asset fund 10T Holding, said increasing activity in decentralized finance, stablecoin, and Bitcoin ecosystem have caught the attention of larger players.
Right now, it's really picking up, and you'd be surprised. It's for people who have no exposure, but who sort of, especially in the last 6 weeks, they're sort of seeing, oh well, Bitcoin's up 70% on the year. Is that what it is, or 30% during this banking crisis? And you know what? That like kind of makes sense. And they didn't need a bailout in that world. And there are some bad actors, but there's a lot of value there and a lot of different things going on. There's DeFi stuff going in the DeFi world. There's stablecoin business. There's NFTs. A lot of different things. They're now ordinals on Bitcoin, even, you know.
The investing veteran says that the latest bear market differed from the last downtrend, as there are more developers in the crypto ecosystem beside a simple focus on price action of Bitcoin and Ethereum. Tapiero says institutional investors are seeing improvement fundamental, like the massive spike in Bitcoin hash rate, the numbers of developers in the space, and the amount of layer 1 blockchain surfacing as potential evidence that the crypto is growing fast.
The space itself is not just reliant upon the price of Bitcoin and Ethereum. That's the big difference to me from 18 and 19, was that, you know, there's so many things going on underneath the hood. The number of developers that have entered the blockchain space is now at an all-time high. So through 22, it kept increasing. You know, of course, you have things like the Bitcoin hash rate. It just hit an all-time high. The number of players in the NFT space, you know, from 18 months ago is up exponentially. So there's the number of layer ones that have had the sort of the top 5 or 6. The usage is at an all-time high. So, you know, it's no longer just about the price of, you know, those 2 leading ones and, you know, some of the other cryptocurrencies. So I think that's also attracting institutional people who are understanding that this is a, you know, once in a generation type of technology.